All right, now gold has just done it again. It set all-time highs last week, and in light of Trump's threats of tariffs to push for a deal for Greenland, it didn't just set a new record. Again, it just obliterated it. Now pushing past the $4,600 per ounce range. And it's been on a crazy run for the last few years, but what matters more is who's buying it and why. And well, when you look into it, central banks around the world have been buying over 1,000 tons a year for multiple years now. No, not just the guys screaming gold as they have been for decades. So shout out to Peter Schiff. But governments quietly building a hedge against a world where money is no longer neutral. Because gold doesn't rely on a promise or a central bank or a vote. It just is. And it's been like that, the most reliable store of value, well, for thousands of years, basically since ancient Egypt. Now, you compare that to the US dollar, and that's been a symbol of global power for nearly a century, acting as the world's reserve currency. No, not backed by gold, but by the full faith and credit of the US government, the strength of the US economy, and the trust that people have in its stability and acceptance. And for a while now, well, dollar confidence is being stress tested. So this isn't just a gold rally, it's a clear signal. And so in this video, I'll discuss why gold has been on a multi-year bull run and spiking now, why central banks are on a buying spree, and what does a recent move by China last year play into any of this run? And lastly, how do regular people like you and I, how do we position ourselves in light of all of this? So let's get into it. All right, so let's go back to 2022. After Russia invaded Ukraine, the US and its allies immobilized roughly $300 billion of Russia's sovereign reserves held abroad. And politics aside, this move sent a clear message that the rest of the world heard loudly. In a geopolitical conflict, reserve assets can be weaponized. So countries started asking, if reserves can be frozen, well, what else can we hold that's harder to block, sanction, or politically gatekeep? And that's where gold comes in. Now, here's the second pressure point for the US dollar. The dollar isn't just vaguely backed by trust, it's ultimately backed by the US government's ability to keep its finances credible. And right now, the US debt machine is running extremely hot. As of January 2026, the US gross federal debt was about $38.6 trillion. Dollars. It's not just about the size of the debt, it's about the interest payments which have ballooned to now overtake what the government spends on its defense. So if you're a central bank in, let's say, Asia, the Middle East, or Latin America, you're looking at two realities at once, right? So you've got reserves which can be weaponized in war, so frozen, blocked, or made unusable through sanctions, even if the assets are yours on paper. And number two, you've got US debt servicing, which is eating a bigger share of its budget. And that combination creates a clear incentive for you to diversify. So, not because the dollar is necessarily finished, but because the world is thinking, well, if US borrowing keeps expanding and interest costs keep rising, well, what happens to dollar confidence over the next decade, 2 decades, 3 decades? And when confidence gets questioned, the smart money will always hedge and build a plan B. And the obvious hedge, and has been for centuries, is gold, because it can't be printed and have its value inflated away. It doesn't depend on one country or a movement or a political promise, and it doesn't come with an issuer attached. So, bought more gold is exactly what central banks did, and this culminated in a gold run starting in 2024. And add in a backdrop of geopolitical instability and a volatile introduction of the US reciprocal tariffs, gold rallied through 2025, where central banks bought over 1,000 tons of gold, significantly up from their average for the last decade. Now, a major move from China also had a part to play in the run of 2025. So, in June 2025, the Shanghai Gold Exchange launched a certified vault in Hong Kong and introduced new gold contracts for delivery for Hong Kong. And why this matters is, well, Hong Kong is a global financial gateway. And so this move effectively now gives more international players new pathways to China-linked yuan gold pricing and delivery without being physically on mainland China. The West has historically dominated gold price discovery through New York and London, usually sold in dollar-based pricing. So China has taken a strategic move to enhance the yuan's role in international trade, adding to the de-dollarization narrative and opening up a new route for gold demand. So all of this is very positive for gold. All right, so what do regular people like you and I do with any of this information? All right, so disclaimer first, this isn't financial advice, but if you take a look at the historic gold chart, it's clear to see that these recent trends, as compelling as they are for gold, stand alongside the historic theme of rising gold price and inflated and falling fiat currencies, mainly the US dollar. And as central banks, the smart money, are looking to increase their stock of gold, well, I'll do the same. Now, of course, gold has nowhere near the potential returns of crypto, of stocks, but it's an insurance policy and it's a hedge and the best store of value in history. So if you're new to gold investing, you can start small. So say 1 to 5% of your portfolio. And you can then increase that over time to balance to anywhere between, let's say, 5 to 10%. And this is, of course, all down to your current financial situation and your longer term goals. So if you're older, potentially you want to be a little bit more risk averse, then there's a good argument for you to have a higher gold percentage in your portfolio. Now, you can buy the physical bars, you can buy gold coins, plain jewelry, which is possibly the truest or purest form of gold investing. However, the easiest way to get exposure is to buy an exchange traded fund, which is liquid and convenient. I hold shares of SPDR Global Shares ETF, which is the world's largest physically backed ETF. So they hold the actual gold, but you just, by purchasing the shares of the fund, you then get exposure to the gold price. So, how long does the dollar really have left? Well, that's left to be seen, right? But historically, gold has been on the up. It doesn't look like there's anything that will stop its relevance. It's only if we discover an asteroid that's fully gold and we can mine that asteroid. But until now, gold remains the best store of value. The US dollar, along with all other fiat currencies, simply due to inflation, simply due to the fact that central banks and government could just print its value away, is slowly going to lose value to gold, which for centuries, for thousands of years, has been the best store of value. So, hope you learned something in this one. If you did, please feel free to drop a like, subscribe, comment. Yeah, catch you in the next one. Peace.